everyone, Corie Burck here from Keller Williams Yakima Valley. I'm your Yakima Realtor. I'm a broker and a managing broker, and I'm so excited to talk to you about the June market update. So just so you know, today we're diving into the things that happened in June 2025. The market updates, we're going to start with national, and then we'll move into more specific local information. So whether you're thinking about buying, selling, just watching the market, or you're thinking about a career in real estate, you can find my email, corieburck@gmail.com, and ask me any questions that you have. Let's jump into the update. Okay, so let's start with the big picture. Across the USA, the housing market has really continued to shift into a more balanced phase. Usually you'll hear people say like hard stop dates, saying like, hey, anything like 4 to 6 months is considered a balanced market. And I think that's the right way to do it, is those like frames, 4 to 6 months, anything less than that is a seller's market, anything more than that is a buyer's market, but a balanced is like 4 to 6 months. You'll hear some people say 5, like right on the dot. I think the 4 to 6 is a little bit more appropriate framework to consider a balanced market. And we're definitely moving into more of a balanced phase in the national market. And that's because when you're thinking about the overall national market, there are definitely areas that are seller's market and definitely areas that are buyer's market, just like anywhere else. Inventory is really starting to gradually grow in most regions. So this is a good thing overall. But buyer activity really does remain steady thanks to a little bit more stable interest rates in the month of June and a slight easing in home prices overall. That's the national market, not the Yakima market specifically. Some other trends that we're seeing nationwide are a rise in new listings, a slight uptick in inventory, homes staying on the market a bit longer than last summer, and price appreciation really slowing down, but still climbing year over year, especially in hot areas. What this means is that buyers have a little bit more breathing room, especially compared to like 2021, 2022. They have a little bit more flexibility and a little bit more buying power. Okay, so now let's zoom in on what's happening here in the local market in Yakima Valley. The numbers really do tell an interesting story here. So according to the MLS for the month of June 2025, 237 new residential listings hit the market. That is just residential, and 211 closings took place. So not quite, just a little over replacement volume in the month of June. Homes spent an average of 65 days on the market. In our market here, just so you're aware, because this isn't true in all markets, in the Yakima Valley market, 65 is the total days from when it goes on market to when it closes. It includes that time in escrow. So you'll hear some other people in other areas, they may say, oh, like 65 days on market, that's really high. We're at about 20 days on market. And I would tell you that, how are you calculating that? So it's just something to be aware of, because even like our regional people that come in and talk to us, sometimes they're caught off guard by the fact that our days on market is so high when our inventory is so low. And we say, yeah, but ours includes time in escrow. So it's just really important that you know that. So you really want to subtract about 30 days. So things should be going under contract at about 35 days on market. Does that make sense? So you want to subtract about 30 days for being in escrow. We're sitting at a 3.6 months of inventory, which is really, again, trending towards a balanced market. We're not overly favoring buyers or sellers. We're still in a technical seller's market right now. Inventory is quite low. There's just not a lot of buyers entering the market because interest rates, while they have kind of leveled off a little bit, people aren't clambering to get into homes. They're moving if they need to move. So let's talk about the fact that that is a 34% increase in closings compared to June of last year. So demand still is strong. We still do have strong demand here. 34% increase in total closings compared to June of last year, when we were much higher interest rate point. So prices are still holding steady. There has been a slight appreciation. The average sales price this time last year was, sorry about that, $363,585, which is up 2% year over year. So not the normal appreciation we've been used to seeing here, but it is slight. And if you're tracking trends over the year so far, the year-to-date average sale price is up 4.12%, which is great news for homeowners and for sellers. Equity is still increasing. Okay, so next I want to talk about the different points in the market and movement by price point, because in our market, it definitely matters what price point you're in, how fast things are moving. So you need to prepare differently for different points in the market. So activity is really strongest in the mid-range market here in Yakima. Homes listed between 300,000 and 499,000 make up the bulk of sales and active listings right now. Higher end homes, $550,000 up, saw a 75% jump in closings compared to this time last year. So last year we were all saying, oh my gosh, expensive homes are taking a long time to sell. There are not a lot of people clamoring to get into these homes. A lot of people aren't joining the move up market right now. That's because interest rates were so high. So if people did not need to move, they were not moving. And what that led to is we had a lot of listings that were sitting for longer. And the good news is we had a 75% jump in closings in that price point this year. So people are starting to re-enter that move up market. That market is starting to move more. They're feeling more confident, and higher end listings are becoming more readily available. So now you might be asking yourself, hey, what does this mean for me? Well, on the buyer side, you have more options than you did a year ago. Just like I said in the May update, you have a little bit more flexibility, you have more options, you have more inventory to look at, and homes can be sitting a little bit longer. So it gives you time to think a little bit before writing that offer. Obviously, this still is different house to house. A brand new listing that came on the market that had 40 people through it in a weekend is going to move quicker than something that's been sitting for 90 days. So, still pay attention to the market conditions of the specific home you're interested in, but don't wait too long. Prices really still are climbing. I would encourage you to not be one of the people who's sitting on the sidelines waiting for that better situation. We are not expecting any kind of dramatic housing correction at this time. And sellers, it's a strong selling market. So if you are thinking about making a move and selling, you're sitting on a lot of equity, demand is still good, it's a good time. Well-priced, well-presented homes are still moving and sometimes even getting multiple offers if you're in that nice mid-market area. So if you're considering listing, competition is still pretty limited right now, so it could be a good time to sell. Now, if you're wondering how these trends affect your specific situation, please give me a call or email me. Let's talk. I'm always happy to break down the numbers for you in your neighborhood, your specific housing type. I'd love to take a walkthrough of your home. Drop a comment below, DM me, give me a call, give me an email. My email is corieburck@gmail.com. Again, I'm Corie Burck with Keller Williams Yakima Valley. I'm a managing broker, and I'll see you in the next one.